big moves in silver and gold overnight on well, later on Sunday, Sunday late afternoon, and it definitely perked me up because I didn't have a position at the time, so I'm like, okay, now I'm thinking about getting in because of this big standard deviation move, and it brings up this question here: what do you do with overnight risk? So let's get into it.
Okay, let's flip through it. Let's get to the next one. So walk us through it, Jermal.
So overnight risk, that typically what pertains to the movement when markets are closed, right? So like exactly like we saw, if you guys, were to pull up a chart and look at what happened in gold and silver, Sunday, it wasn't right when the markets opened at 5 p.m. our time central, but it was like around like 7 or 8 or something like that.
Yeah, I got to go back and look, but I think you're absolutely right.
Because you were on the show. So it wasn't happening during that time period.
Right.
I actually was watching NFL Hall of Fame speeches at the time. So I was watching a lot of those, and those are always great. I just love watching those just because people are pouring their hearts out about their career, their lives, and their families and all that. So those are great. And it happened while I was watching that. That's what I remember. And I was like, oh, look at this. Gold was down like almost 4, because gold was down almost 4%. Then it ended up going through that. And it was around 1670, 1680 or something like that.
Yeah, I think it was, wasn't about $70, $80 move. Yeah.
I mean, it's a big move,
it's a huge
silver, I don't remember exactly what if it traded, it might've traded 21 and change. I don't remember exactly, but I mean, those are pretty big moves. And, for somebody like me who doesn't have a position,
right,
it's great. But if you don't have a position, that's a big move. I mean, like we have here in Spree, look at that overnight move. That's $2 right there. I mean, that's something to definitely, open your eyes at and say, oh, what's going on?
Right. And so, John, let's jump to the next slide. So this is no matter what you're trading. And I really want to hear your take from an equity trader standpoint, an options trader standpoint. Gaps can occur between markets close and open. That's just stating the obvious. Friday's close and Spree was 71.61. We opened Monday at 70.88. So, 80 point, an 80-point movement is almost a 1% movement overnight where you couldn't manage. So, in the world of equities, you're 8:30 to 3 o'clock. Yes, there's after hours markets, really not in the options. In stock, it's usually a horrible time to trade stocks because they're wide and they make no sense in terms of the way they move. So you have this exposure, this risk. How do you look at that window where you're not trading for the other, 16 hours of the day, Jermal?
Originally when I saw this, and I actually had I had an alert out for when Spree dropped below 71. I actually set it up on Friday. Just because it was closing in on this, as we saw, it was like 71, 61. It was flirting with 71. And I put an alert out just to be interested. But, to get to your question, this is definitely one of the things that had me hesitant about trading futures because of this big gap that can happen overnight. What do you do in these situations? How familiar are you with the product? And even then, I mean, we're talking about commodities. Commodities, they kind of have a mind of their own, and they can have these big moves. Now, once I started to get more, education about, talking to you and talking to Frank Weekend, and we got an understanding the idea of futures and of course, understanding my risk and making sure I don't get too big in any one position, then it's just one of those things that honestly I accept. It's no different than, positions that I put on without, option positions, whether, it's a condo or straddle, et cetera. That's part of the risk that you take when it comes to trading. But I guess if there were times where I was really worried about it, I would try to find ways to offset risk. I would, in this case, if we have Spree, I would try to find ways to, maybe if I'm long Spree, sell some GLD calls or something like that, just to offset risk. But in my case, I'm comfortable with the risk. Because it's a part of the, it's a part of trading. I mean, in that regard, but I was paying attention to this move, and Monday open. I mean, like we said, we saw the huge move down on Sunday, as you Absolutely nailed it when you talked about how we had the recovery and we came back, mostly of Sunday and then a little bit on Monday, but we still were down below that 71 point, which again, like I said, I was looking for that. And so I got in. Your boy has a position now in Spree.
He's sitting on some medals. I'm like
sitting
it.
on some medals now. I am. Yeah. So, it creates a huge opportunity, but it also, there are some people who have taken it on the chin probably in this one. And so you're looking for that mean reversion. And at some point or another, you assume it will at some point or another. Because as far as I know, there's no global major situation as to why we were down. I think it was just movement of funds.
Absolutely. I mean, the idea of a geopolitical event, you would have seen everything move. You would have seen the dollar move, equities move, all of this on some, there are automated algorithms that traders have that just read the news headlines and they subscribe to a bunch. And depending on what the headlines comprise of words, they will act in the marketplace. So everybody's playing every angle they can have. It's fascinating when you kind of look behind the curtain. But all that means is that's another guy adding liquidity for a different reason. I frankly don't care what he's doing. As long as he's putting liquidity into the marketplace, it's all good to me. So you're right. So for me, the takeaway is, and I think you hit on it perfectly, is it's got to be manageable risk. I know there's a propensity. We trade that one standard deviation move. We look for that statistical advantage. We trade that two standard deviation move, looking for statistical advantage. But we know, looking at that bell-shaped curve, while we have a good probability of it trading back within those ranges, there's still a probability that it extends. And this was one of those times where, you know what, the question became loss mitigation. And how do you do it? Do you hedge, like you said, using some GLD calls to take a little bit of the exposure off? Do you make sure that, and what I loved is I'm comfortable with it. And that sums up every trade you should have in a nutshell. You've got a strategy, you've got a bias, you're playing with a statistical advantage. And now you're adding the mechanics of it's the appropriate size, the loss I have, I'm comfortable with. So, John, if we can jump to the next slide, that's the important takeaway. And that's what's really hard to achieve with institutionally sized futures products. The equivalent move in silver, at one point, you were out $10,000 per contract. I don't care who it is. That's a lot of silver. That's a lot of pain to take in a 2-minute move. So, none of us are full-time traders. As much as we all were at one point in our careers, which is great. So we know the difference. Even that full-time trader piece, there are parts of, and I'm curious, being a futures trader, you do have that wonderful access, and we're working on it at Smalls where you can trade overnight. I can't tell you, in an attempt to do that, the times I fell asleep with the mouse in my hand, and my wife had to come and wake me up. And then the panic that I was clicking the button while sleeping. So, and I've been, I've done this as well. Seen guys do this. Staying up and trying to capture all that move or recoup or whatever. You just basically, no human being can do that. So you have to accept, as a trader, as you say, there's going to be times where I either don't have access or there is no access provided to me. And what do I do to manage it? And the key piece is either hedging off some of that exposure before the close. You may have a trade that Friday afternoon, you can't get at for 2 days. Now, Saturday and Sunday are event days. Things can happen. So I look to Friday. I go through every position and look to, do I want to mitigate some of this on the off chance that some chucklehead does something and causes everything to move? You've got to look at that, and that carryover of time frame is different. So you look to mitigate, you look to balance. John, let's jump one ahead. So again, running through this, you've taken a big dive into futures. So you've got a long spree position right now. Walk through with us a little bit of your mechanics. You don't have a 24-hour market yet, but you will in small futures. What is your strategy? You've got a loser. And I'm curious to hear your thoughts. I really want you to walk us through this. Everybody has losers. And sometimes the best days in my trading career have been getting back to zero. And I know that sounds silly, but as a scalper, your P&L was very up and down. It was very volatile as just a directional scalper in the pit. So some of those best days were digging yourself a hole early and getting back to zero. And the tools you would use were different back then than you use now. But what are your thoughts about, you've got a losing position now. Mechanically, are you looking for full reversion where it becomes profitable? Are you happy to, on a bounce, sell something to mitigate it? What are your thoughts?
This is very good because, it does change from time to time, and it can change with different products. In the case of this product right now, I'm only sitting on a small loss. I think I bought it at like 70 spot 25 or something like that, I think. And at some point yesterday, it was a loser. I was down like maybe $100. And, but I think, again, I think I try to think about this prior to even getting into the trade. Why is it down so big? If there were a situation of like, I'm going to make something up. There's an oversupply of gold and silver all of a sudden in every miner in the world. Well, then I probably wouldn't have jumped in right away. I'd probably wait a little bit more to see that shake out. Right. But because of the move is big, like we said, you're a very experienced trader. And even without talking, you said what I already thought. The idea that this was it was just, a lack of liquidity for whatever different reason, right? It wasn't a situation of, oh my God, Bitcoin's going to the moon. Let's dump our gold and silver holdings and get into Bitcoin. Even though, Bitcoin has moved and so have metals have moved and so have rates have moved. So there are some things that are moving. But I think the initial idea of this isn't just a situation where, there's no bids for gold and silver. I didn't feel like that was the case. So I felt comfortable getting into position. So as a result, going forward, I guess, is there a chance that type of move could happen again? I mean, sure, certainly. But I am certainly looking at this as a mean reversion situation. I'm not as worried right now. I don't feel the need to necessarily put on a hedge because I'm just not that nervous about the position for the time being. I feel like it was a great entry point. Mm-hmm. And looking at the chart over the last year, the last time I think spree was as low was March. So just 5 short months ago. Yeah. So, in that regard, I'm looking at it as a mean reversion play, and I'm not worried about any, lack of, and I know gold and silver can move like this. I mean, they're commodities. They have this type of ability to move. So I'm not worried about it and for the time being. I mean, not extra worried, I should say. Of course, I think about every position and I think about them all. And every day, you look at it and say, once again, like, okay, is this position good? Do I like it? Do I feel like there's a possibility for mean reversion? Is there if it does go lower, how much lower, does it go where I think about maybe buying more, or do I think about exiting the position? And so those are, both of those situations. If it goes, say another 2% lower, maybe I think, and depending on the fashion, maybe I think about, adding. But if it's like, 2, 3 and it's starting to look ugly, well, then maybe I think about exiting position and taking a loss. So those are all the thoughts that are in my head, and it's jumbled up, I know, but
no, it's actually very clear because you started with mechanics around when you look at the market. You reevaluate, and I think that was great. You reevaluate your strategy every day. That's an important piece because we all have bias, but sometimes the bias is incorrect. We need to not just say, well, my bias was this on Monday, and because I've got this losing position on, it's got to be the same. Things change, and you've got to be honest with yourself. And if that bias does change, you now change strategy. You may not want that trade, or you may want it in a different way. I thought that was a great starting place because so many of us don't go through that mental exercise every day. And that really sets us up to be more productive in what we're doing trading wise. So it was a great walkthrough, Jermal. Thank you so much.
I mean, right now I have an oil position, and I've gone through those range of emotions over the last, week or so with that position. I mean, it's, I got it at 70. And so, it was trading as low as 66 and change the other day. And, I was really close to thinking about, do I want to close the position or not? Hold on, we're up 2 today. So I'm still sitting on a loss. And even today, I've thought about it at least 4 times. Do I want to close, do or not? What is it? What is the action? What is it? But, that part of that is the experience that we're lucky enough to have. I can assess the action just based on looking at it, watching it throughout the day. I am interested in this right now because it hasn't moved all day. No. I almost feel like it could revert and go back down, right? And so I'm thinking about it. I am thinking. Who knows what's going to happen by the time we get out of here today and what I'm going to do with the position. We'll see. But, like we said, I think the key thing is you have to constantly evaluate it and if, how it fits in the book and if it's, integral to what you have and what you have going on and, those things. So.
All right. Fantastic walkthrough, Jermal. Thanks so much for continuing to take us on this journey. And guys, tune in next Thursday. Jermal will be back with Frank Caberna to take you through the nuts and bolts of overnight risk, which will be really fun. But you did tune in for the better half of the leap. But Jermal, my friend, I'll see you next week. Have a great day. Bye.
Later.